And welcome back to Newsmax Now. The price of oil continues to fall, down under $30 a barrel, a price not seen since 2003.
Yeah, in fact, over the last year, the price of oil has fallen more than 40% from where it was this time last year, and it's down almost 60% from its 2015 high point in June. Everybody loves low gas prices, but there are other side effects. And for more on this, we welcome in energy market analyst Stephen Schork, editor of the Schork Report. Stephen, it's great to have you with us.
It's great to be back. Thank you.
All right, so oil down now below $30 a barrel for the first time in decades. It's also impacting the equities market. Stephen, for the average IRA or 401k investor, why is the price of a commodity like oil having such a big impact on my stock portfolio?
Well, it's not just the price of oil, it's also the price of every industrial commodity, and that's the concern here, because commodity markets are the canary in the coal mine. That is to say, they are great leading indicators. And when you get a significant pullback in not just oil prices, but in copper, aluminum, lumber, steel, metallurgical coal, this is telling you something about the health of the economy. And what it's telling us is the economy is not strong, and we should expect doldrums coming in through 2016. This is finally catching on to the market in a broader sense.
Could this have a ripple effect across the country?
It already is having a ripple effect across the country. Right now, what we're seeing here is the U.S. industrial sector, and I want to be very clear on this. The U.S. industrial sector is already in recession, and we've been in recession for at least the last 6 months. Whether you look at durable goods, capital expenditures, factory orders, the industrial production numbers for say, that is telling us that we are clearly in economic doldrums, and this is certainly having an impact. For instance, let's take the most recent update on U.S. jobs here in the United States. Last week, we got news that the job market increased by 292,000 jobs. On the front of it, it sounds good. But unfortunately, the United States only really created 11,000 jobs in December. That's because in every December, the Bureau of Labor Statistics makes a seasonal adjustment, a statistical fudge, as it were, and adds jobs because it takes into a seasonality impact. So 281 of those 292,000 jobs that were reported to increase in December, the majority of them were just made up. So clearly, we are still seeing the knock-ons, and the job market and the economy in the U.S., if you dig deeper below the headlines, really isn't as strong as we've been led to believe.
Well, let's talk about job losses too, Stephen, because in places like the Gulf Coast of the United States, also in North Dakota, they had experienced an oil boom, and there were jobs there, a strong housing market as well. But a lot of those jobs now are in jeopardy, are they not?
Oh, yes, absolutely. So far in 2015, the United States alone has lost over 140,000 jobs in the oil patch. And that is a concern because these are jobs that pay twice the average across the board right now. So we are losing a significant amount of jobs in significantly high-paying jobs, both here in the United States and here in Canada. Now, when you extrapolate that out, the loss of jobs, the loss of income, the loss of income tax revenue, sales tax revenue, real estate tax revenue on these communities, it is having and will continue to have a devastating impact in 2016.
Now, we talked about the effect that it's having nationally. What about the impact it's having globally?
Well, absolutely. So right now, of course, over the last 5 years, the two markets, oil markets, it's a bifurcated market. So we have our markets here in the United States and Canada because we cannot yet export our crude oil. But also globally, we have a continued glut. And so what we have to look forward to in 2016 is the ongoing price war between the Sunni side of OPEC and the Shia side of OPEC. That is to say, now that Iran has been welcomed back into the international trade and they'll be able to introduce their barrels to the market, Saudi Arabia and Iran are going to fight one another for market share. Now, where's that market share? Well, the demand growth expectations are all in Asia. So now, let's look at Asia. Right now, China is devaluing its currency, it's cutting its interest rates, it's dumping its surplus commodities onto the global market. So clearly the signal out of China is trouble ahead. Same situation in Japan, where the country is either on or flirting with its fifth recession since 2008. So now you have OPEC's number one producer and OPEC's number four producer competing for market share inside of a market that is clearly troubled. Therefore, the odds of we becoming deglutted of this excess oil in 2016 are extremely low, and this will certainly keep a bearish tenor on the market this year.
What a mess. What a mess,
Wow.
and something to just consider when you are happy about filling up your car with low gas prices. There is a side effect to that as well. Stephen Schork, thanks so much for being with us. We'll have you back again soon as we continue to keep an eye on the oil issue and the economy as a whole.
I appreciate it. Thank you, and Happy New Year.
Happy New Year. Our pleasure. Coming up, we're going to take a look, try to laugh a little bit based on that economic news. We might need a few jokes. Jimmy Kimmel, Jimmy Fallon, and the rest of the late night crew, they're coming back with your headlines and punchlines. Plus, we still want to hear from you. A snowstorm could bury 50 million people by this weekend. You have a cute name for the snowstorm yet? Do you have your supplies? We want to hear from you. Weigh in.